Hello traders, hello everyone, my name is Horvat and welcome to a new free video analysis here on TradingView. So actually I will update you on some of the recent free articles that we shared out. So at the start of the year we were looking for flows to change a little bit, which is usually the case at the end of December or start of a new year when a lot of portfolio adjustment is happening, of course. So we were expecting dollar yen to see more upside, and the reason why was, of course, this wedge pattern and this broken trend line. And also we had some very nice candlesticks formations, especially Morningstar here on a pullback, which actually suggested that we could see more upside. And if I update you on this structure, you can actually see that market has made very nice 5 waves up here. Okay, and 5 waves up normally means that the trend has changed, okay, because it's an impulsive, very strong move without overlaps. But of course, nothing moves in straight lines, so it's very important to keep an eye on a potential pullbacks, and those pullbacks are usually made by 3 waves, which can retrace back to the area of a former wave 4. So in our case, it means that this market could retrace even to 104.40, maybe even at some very deep pullbacks to 103.30, where was this former wave 2. So in either case, I think that there is room for a little bit more weakness here, more complex correction maybe, before this market could again stabilize. So for now, just keep an eye that this market could either go sideways or to the downside. But always when we are looking at FX or dollar in general, we shouldn't be looking only dollar, but also some correlated markets. Intermarket analysis is also very, very important. So I'm always looking at the 10-year US notes. And what I'm looking at here is a very nice an ABCX ABC pullback. So I'm not sure if this market is really going to resume a multi-year uptrend here, but at least in the short term, I see price moving into some very interesting fib levels, okay, with an overlapping decline. So even if the bounce would be temporary, still I think that market could respect this levels and maybe just reverse higher, at least in 3 waves. Okay, so if this market is really moving into a support, then dollar yen, okay, is also moving into resistance. So this makes sense to me why ABC pullback on dollar yen could really see a little bit of more weakness in the near future. Also, if dollar yen is really headed lower for a higher degree correction, okay, while maybe 10-year US notes will just move sideways here or maybe even bounce rarely away from these levels, then we can also expect that maybe euro dollar, okay, can see more upside. And in euro dollar, what I see here, and we also shared this article last week, if I'm not mistaken. And what I see here is a very nice 3 wave drops. If I label this real quick, you can see an ABC drop. I believe that this wave B here was a triangle, okay? So if I just draw this real quick, and now you have a very sharp recovery. And the reason why I turned bullish recently was this broken trend line resistance. Not only that, we have seen a 5-wave rise back into the wave B area. It means that the price overlapped the previous structure, meaning that I cannot count 5 waves down. So if it's not 5 waves down, well, then probably this was a 3-wave move, or maybe whole completed correction, we are going much higher, or we'll just continue sideways in a triangle, or maybe some kind of a combination. But in the short-term structures, because of this dollar yen weakness, because of the 10-year US notes that are trading at the support, I think that this market could see a little bit more upside from here, okay? And even if this would be, let's say, a 3-wave structure, so that we focus on a minimum expectations, right? Then we would expect that current leg would be very similar to the previous one, okay? And the previous one here, I believe, was a flat formation, okay? Here was a flat. So that's an irregular formation where you have wave B moving to a new extreme and wave C falling below wave A levels. So that's the structure that actually suggested that we are headed higher. And in ideal scenario, this will actually now be a new 5-wave movement underway. So we'll see how actually market will unfold in the next few sessions, but I think that if we can breach these resistance levels that are very strong, especially if you look back here at these swing highs. So let's say that we get a close above 1.22 level, then I think that we could be trading much higher into wave 3. If on the other hand we see a very sharp drop in 5 waves back below or back towards 1.2 figure, then I think that much more complex patterns will be playing out, and it could be very difficult actually to spot the next probable move for the euro. So for now, I think that this bullish case is still very valid, and especially if you're maybe also familiar with and you love the basic technical analysis and just ignore the wave principle, you will be able to spot here this potential head and shoulders formation. Okay, so that was your left shoulder, you have a head, and now you have a right shoulder, and now you are at the neckline. So it's a very good combination actually, head and shoulders pattern with Elliott wave principle. So if we can see a daily close, as I said, above this 1.22 level, or of course above this neckline, then it would make sense maybe to see some kind of extensions, maybe higher into wave 3. At the same time, dollar yen could see more weakness. But as I said, it's very important to see what these 10-year US notes will do. And the 10-year US notes are not important only for dollar yen. It's also a very important market for gold. Okay, so on gold, we have seen recently a move to a new swing lows, which is not a surprise. We are tracking a very complex correction there. We were looking for a few different scenarios, and this market actually is the reason why the gold is also moving to the downside. And if I just make a step back and try to avoid this intraday noise, because it's very hard in the middle of corrections to spot the next probable move. So in such case, it's always better to step back and look at the higher degree time frame charts, just to remind ourselves where we are trading, where we are in this time frame. And here we definitely have to respect the price action away from 2015 lows. It's wave 1, wave 2, nice, very strong extended wave, which I believe it's a wave 3, and now we could be trading in a wave 4. Now wave 4, it's a corrective flag. So the current substructures actually confirms the idea that we can be in a wave 4, because we already have an overlapping drop. So this overlapping drop actually suggests that this reversal from the highs is not impulsive, it's not in 5 waves. So if it's not a 5-wave movement, then it's a corrective movement. If it's corrective movement, then we can assume that this is posed with an uptrend. Of course, not all of the structures will be perfect, but here I think we have a very nice potential scenario for more upside after a pullback. But the first support is here, the second one is a little bit lower. Now also, let's take a look real quick on Bitcoin. Now Bitcoin has seen some of a very sharp reversal drop of more than $10,000 in just a few hours. Somehow that's not safe haven for me, so you have to be very careful here when you are tracking or trading these markets. But still, looking at the 4-hour chart, there is a chance that this rise away from end of January will resume, but only if we see a drop in 3 waves, and this 45,000 down to 43,000 will hold as a support. So that's a very important key level. So as long as we are above that level, the trend or the uptrend is still here. Okay, but keep in mind that in higher degree charts, I'm seeing here market maybe to completing this extended wave 3 very soon, so much deeper pullback could be in the cards. Okay, Darius, thank you very much for your attention. I hope that you enjoyed this video, and please give me a feedback in commentary below to see if you are satisfied, and I will make sure to record more of those in the future. Bye.